we're not making predictions on the outcome of the election. That said, the market tends to like gridlock. If we can get a mixed government, not a lot changes, and the market doesn't like uncertainty.
It's funny, isn't it, how the politics has usurped the market narrative. And this time last week, we were talking about the favourable CPI. We were talking about the jobless claims. It feels, doesn't it, that the Fed is playing second fiddle. So is this a market that's still about the Fed, or has the politics on November the 5th injected a new source of volatility into these markets?
I do think the election has created additional volatility. That said, the market trades off of earnings, and absent some policies, for the most part, U.S. businesses figure out how to make money in all different environments. So while it is somewhat of a distraction right now to the overall economic factors at play, we do think that ultimately interest rates, the Fed, unemployment, that's what's going to drive earnings going into 2025.
So I'm going to ask you to stick your neck out here, Brooke. It'd be fair to say that gridlock, right? Market obviously likes that. If, government of Congress is sitting there arguing with each other and can't get any legislation passed, it leaves business and companies to get on with what they do best, which is making money. Would it be fair to say, though, that if there was a Republican sweep, it would be even more positive for equities?
Mm-hmm. It very well could be. Less regulation tends to favor businesses. Lower taxes tend to favor businesses. That said, we have an issue with inflation right now. And when you look at some of the protectionist policies that Trump has indicated that he would like to impose, there could be concern around a resurgence in inflation or even a slowing economy. He's indicated that he wants to put a 10% tariff on imports, potentially 60% tariff on Chinese imports. That's going to bleed through to prices. If we are producing here domestically, wages are higher. There are some goods that we don't produce that we need to have imported, and that could mean higher prices and lead to additional inflation. I read one study that indicated that it could be as detrimental as 1.7% to GDP. So I think we have to be cautious in just assuming one party can be significantly more beneficial than another.